Howdy guys, what's going on? Clark Sells Homes, coming at you. Clark Hill with Century 21, all moves right there. Talk about a couple things today. Talk about loans. A lot of people have been asking me what's with loans these days. It's a little tricky. Fortunately in our market prices have come down a lot. Looking at median house prices today around $450. Way down. It used to be $500,000 you couldn't get a decent house. So you can get something pretty nice for $450. So what's happening in the way of loans? Loans are not as easy to get as they used to be. It used to be, hey, you come in here, you tell us what you make, we don't mind, you just state your income. Those are out the door. Stated income, see ya baby. What else do we got? Zero down? Used to be you come in, $0 down, we'll give you a loan. Here you go, sir. Not anymore. Not these days. How about this? No income, no credit? We don't do those anymore. Let's talk about what we do. We have two main types of loans that most people are getting, FHA and conventional. Now, we'll talk about FHA first. Used to be we didn't see a lot of FHAs. Why? Prices were high, and you couldn't get a loan in FHA for more than, it was like around $370,000. Couldn't get much for that. Well, today, not only have they increased the loan rates significantly, but you can also get a house for much less money. So, what's good, what's bad about an FHA? Well, let's go over the good. The good is you need a minimum of only 3% down. It's not zero down, but 3% down is a lot better than 20% down like you needed 50 years ago. They also offer very good rates. FHA, because they're backed by the Federal Housing Administration, offers competitive rates, and if you have mediocre credit, you're probably still okay. Now, I'm not a lender. I'm an agent. I sell houses. Talk to your lender about more of the specifics and the details. You need to get your credit run and have your income verified and all that. And we have very good lenders here on staff too if you don't have one of your own. Now, what are the negatives with FHA? Well, you do have to provide documentation. It's not like before where you just show up and say, "Hey, I'm a millionaire, give me a loan." Also, you need mortgage insurance, so that's going to be an added cost as well. It's usually, depends on the price of the loan, but you're looking at a certain percentage of the loan amount. It's going to be tacked on each month that you're going to have to pay in addition. Lastly, if you're buying a condo, you have to be very certain that the condo is FHA approved. Some buildings are approved, some aren't. If it's not approved, it is possible to do what's called a spot approval. It's a very misleading term. Spot approvals take a long time, several weeks. Let's talk about another kind of loan, conventional. If you're not doing an FHA, you're probably looking at a conventional loan. Generally, you need at least 5% down. 5%, you can put down more. If you put up 10%, 15%, 20%, you're probably looking at a better rate. You're probably looking at a lower monthly payment. On condos, as of right now, July 24th, 2008, now again, you got to check with your lender because these things are changing every day. What's true today wasn't true yesterday, isn't true tomorrow. But as of today, 5% down on a condo, conventional, probably not going to work. You're going to need to put down at least 10%. Remember, on any loan, remember to factor in not only your monthly mortgage payment and mortgage insurance, but you need to consider some other things. Property taxes. You're always going to have to pay property taxes. You can pay those on a monthly basis. If you, it's called impounding your taxes. You can have that option, or you can pay on a biannual basis as well. But either way, you're going to have to figure in property tax costs and insurance, homeowners insurance. Every lender requires it. Even if you're not getting a loan on the property, obviously we recommend that you have hazard and fire insurance. And lastly, if you're buying a condo, HOA payments. Here in the San Fernando Valley, you're looking probably between $250 to $300 on an average HOA payment, although it varies widely. Sometimes you're looking under $100 on a PUD home, and in some of the nicer areas, high-rises, mid-rises, you're looking upwards of $500 or more on an HOA. So check with your agent. Check with the association to get more information. Remember, check out our website, clarksellshomes.com, for a lot of great properties. We specialize in foreclosures. We've got a bunch. Give us a call or check the website. Feel free to contact us. Thanks very much.